You're staring at a price chart, trying to decode the next move. The market looks like chaos. Suddenly, an indicator pops up, clearly outlining where the price will likely bounce or break through. You confidently place a trade. Boom! Profit rolls in. Sounds too good to be true? Not anymore. Today, I'll introduce you to the Predictive Ranges Indicator, a revolutionary trading tool once locked behind a premium paywall. It's now free on TradingView, and it's changing how traders spot opportunities. In this guide, I'll break down everything: how it works, why it's effective, and, most importantly, how you can use it to execute smarter, more profitable trades. If you've ever struggled with understanding support, resistance, and trend direction, stick around because this video will transform your approach to trading. Let's dive in. Understanding support and resistance, the building blocks of market analysis. Before we get to the Predictive Ranges Indicator, let's set the stage by understanding why support and resistance levels are critical. What are support and resistance levels? Think of support as the floor of a price movement, a level where the price tends to stop falling and often reverses upward. Resistance, on the other hand, is like a ceiling that the price struggles to break through. These levels reflect the psychology of the market, traders buying at lows and selling at highs. Here's the catch: these levels aren't static. They evolve based on market sentiment, news, and trading volume. That's where the Predictive Ranges Indicator comes in, dynamically updating these levels in real time. Introducing the Predictive Ranges Indicator. The Predictive Ranges Indicator, created by Lux Algo, is more than just a simple support and resistance tool. It's a predictive model that forecasts likely trading ranges. Unlike traditional static tools, it adapts to market conditions, offering real-time insights into where price action is most likely to occur. How it works. Support zone, green, indicates areas where the price is likely to bounce upward. Resistance zone, red, highlights levels where the price might reverse downward. Central line, yellow, tracks the market's central tendency, helping you gauge the trend direction. Why this indicator stands out. Dynamic adjustments. Unlike rigid tools, the Predictive Ranges Indicator recalibrates as new data enters the market. This dynamic nature makes it more reliable for identifying current opportunities. Multi-time frame analysis. Want to analyze long-term trends while trading intraday? The indicator lets you set custom timeframes, so you can align your strategies across daily, hourly, or even minute-by-minute charts. Setting it up on TradingView. Let's walk through setting up the Predictive Ranges Indicator. 1. Open TradingView and select your favorite trading pair. For this guide. 2. Click Indicators and search for Predictive Ranges by Lux Algo. 3. Add it to your chart, and voila! You'll see the green support zone, red resistance zone, and yellow central line appear instantly. The science behind the indicator. The Predictive Ranges Indicator leverages statistical models, including average true range, ATR, to calculate likely trading ranges. By analyzing price volatility and historical data, it provides traders with a roadmap of possible price movements. Key settings you should know. Length. Adjust the sensitivity of the ranges. Shorter lengths make them more reactive to price changes, while longer lengths smooth out noise. Factor. Controls the width of the zones. Wider ranges are ideal for long-term strategies, while narrower ones suit scalping or day trading. Source. Defines the price data used in calculations, closing prices, or high-low.